Okay, what's up guys? It's Jeff here with FX Mindshift, and today we're going to be talking about levels in the market maker cycle. So this is a popular topic. Okay, everybody asked me about this and how to identify the levels, and if you're struggling with identifying the levels, hopefully after this presentation you guys will have a better understanding of it. Okay, so first question we're going to ask is, what are the levels, right? What are they? Levels are the market maker cycle, okay, basically drawn out over 2.5 to 5 days of movement in a particular direction, right? So it's just basically the cycle, okay, and it can on the low end last 2.5 days, and it can also last on the high end 5 days or more, sometimes depending on what the market maker's targets goals are in terms of what they need to collect in contracts, right? So this kind of gives us a structure, like a structure in this dynamic market, so you can kind of see the different levels, and you can say, okay, well, yeah, I'm in level 2 here, or I'm level 3 here. So it gives us a structure to look at, right? So it also gives us a direction or a bias when we look for our trades, right? And we went over that in the intro video and also in the different setup videos that I did. It gives you a bias so that you can know which direction to trade when you drop down to the lower time frames. All right, so let's take a look at the market maker trend cycle, and then this is basically what it is, right? Okay, so here is our Asian session accumulation. Okay, week beginning, false move, stop hunt out of the box, okay, down to create the W and start the cycle. And our first day of rise also has 3 intraday pushes. Okay, this is the start of the trend. Into day 2, Asian session accumulation. We're expecting another day of rise, so we have a stop hunt low, right? I was expecting this, stop hunt low, then rise, 3 pushes up. Into day 3, Asian session accumulation. One more day of rise, so another stop hunt, okay, stop hunt low into this rise into this M structure to round out the cycle and give you your midweek reversal. Okay, so this is generally what the cycle should look like. Okay, and obviously flipped around the other way, going the opposite way. Okay, this is what you're generally looking for. Now, to identify the levels, how do we do that, right? How do we identify the levels? Well, basically, you're looking for, like I said, 2.5 to 5 days of drop or rise. Okay, each level will be approximately 1 ADR. Okay, that's why it's important to have the ADR indicator, so that you'll know what each pair's ADR is, and you can kind of tell from that whether you're in level 1 or level 2 just by looking at that sometimes. Okay, Asian session box stacking, Asian consolidations. This is something I'll show you with examples later on, but basically you're looking for the Asian session boxes to kind of stack on top of each other over the days. Okay, EMA crosses is another good way, and then that's denoted by the different crosses of the different EMAs. So level 1, you're looking for a 1350 cross. Level 2, you're looking for a 5200 cross, and at level 3, you're looking for a 5800 or 200-800 cross, or you can see that the EMAs will be really fanned out. Okay, and I'll also have some examples of that in the next few slides. Okay, so let's take a look at the charts, and we'll go over the first example. This is just using days of drop or rise. Okay, so sometimes it's very, very clear, right? You can see just kind of like stairs, right? Day 1, day 2, day 3. We're at a peak formation here. We have our level 3 peak with a little M structure at the top. This is our first level of drop. Okay, so level 1 drop here, day 1 into this consolidation. Then we have our level 2 drop into this consolidation on day 2, and then another drop into this consolidation on day 3. Okay, so you can see it's very, very clear. 1, 2, 3 levels of drop on 3 separate days. Okay, and then this consolidation into this level 3 chop here. Okay, now sometimes they don't do it in just 3 days, right? It's not always going to work out like this perfectly, right? So here's an example of 3 days of rise over 5 days. Okay, so you can see here, here's our peak formation low. Down to the bottom, this is our level 1 rise into this little consolidation here on day 1. Then we have our day 2, starting this day 2 rise here into this consolidation on level 2, but they don't take it above on day 3, right? They kind of hold this level here into consolidation on day 3 even. Okay, and it isn't until the end of day 3 into day 4 that we get our next rise into our level 3. Okay, so day 4 we're into our level 3. we have this little, it looks like an M structure here, but it's not really an M structure here, right? Because we didn't have a close below the 13. Okay, so we can expect that this will kind of go up a little bit more, and you can see that they held the level again into day 5, and then this is where they made the real M structure. Okay, we can see the close below, then and then back above, and then this is where you can take your reversal, right? So it's like I said, it's not always going to be perfect 3 days of rise or drop. Sometimes they can hold it, and they can even extend this. Okay, even, right? This could even go further, right? Sometimes they do that if they don't have enough contracts or they haven't met their targets. Whatever. It's all about the money for the market makers, and they have certain goals that they have to meet. So they can always take it further, right? But if you understand the pattern and the levels, then you'll have a better idea of where you are and when to get out or when to get in. Okay. All right. Next, using the ADR to determine the levels is also a very good way, because sometimes that's all you need, right? If a pair has an ADR of this happens to be EU, and that pair's ADR I think is around 85 or 90. Okay, so these white lines that I drew connecting the low point to the high point of the rises, they all look pretty much about the same size, right? So sometimes, and this is actually about 85 to 90 pips. So it is one ADR, these bars, these lines, okay? So you can sometimes just draw the ADR, okay, and then you can get your levels out that way. So you can see here 1 ADR, then a pullback, 2 ADR, then a pullback, and then into 3 ADR, okay? And here at the ADR high, what you're expecting is some kind of M structure before they reverse and come back down, right? So that's using the ADR. That's very simple. It's one of the easiest ways to do it, okay? And then you don't have to worry about what day and what just look at the ADR and figure out measure it out, each of these moves, and you'll see that it's about the same as the ADR, and then that's like your levels, okay? So level 1, level 2, level 3. Okay, that's an easy way to do it. And next I'm going to show you the Asian box stacking. So what this is you'll see this chart here. And this is USD CHF. You'll see we're at the level 3 peak at this point here with the M formation, and then our first level of drop, right? So that's our first level of drop on day 1, and you can see our level 1 consolidation here. Okay, so this is your Asian box, right? Then level 2 drop, okay, into this consolidation here, and there's your Asian box, okay? And then level 3 drop into consolidation, and there's your Asian box. So you can see it's kind of like a stairs, right? Just coming down, like one box stacked on top of each other, 1 day, 2 days, 3 days, right, of drop. Okay, so that's how you can use Asian box stacking. And you can see here we have our W, okay, then back up, rise, level 1 rise into Asian session box here, level 1. All right, so very, very clean. This is also very clean, right? An example of when that doesn't look so clean is when you have some kind of consolidation. So this is Euro CHF, okay, and you can see here this is our peak formation here. Our Asian box is here on this peak formation. We have our second leg W to start the cycle, okay, and then this is our first level of rise into consolidation. Okay, so you can see here this box is kind of parallel to this box, right, at the same level here. They tried to go out of the level, but then they came back down, and you can see that this Asian box is also kind of like on the same level as these other two, right? And it isn't really until you get to here, okay, this Asian box, half of it is still within line of these 3 boxes, but then here is where you actually get the push into level 2, and it's not until you get this break of this structure, when this price goes above the level 1 structure, that's when you know that you're in level 2. Okay, so these Asian boxes that are bleeding into each other, okay, basically what that's telling you is that you're still in level 1 consolidation here. Okay, you're not into level 2 until you break above this structure here and go into this range up here. Okay, and you can see that this box now becomes above these guys. Okay, and this box here, when we rise into level 3 into this consolidation, okay, now this box is clearly above this box. So this one's clear above this one clear above this one, but these 3 are kind of like in range in consolidation, right? So keep that in mind when you're doing the stacking method. Okay, you look at the boxes, make sure that they're not bleeding into each other and that you're not into range conditions, and you're looking at when the structure breaks. You're above the level 1 structure, that's when you know when you're level 2, and here you're above level 2, you're breaking this structure here above level 2, that's when you know you're in level 3 at the ADR high nonetheless, and that's when you're looking for your reversal. Okay? All right, next we're going to talk about levels using EMA crosses. Okay, so now this is another good way to identify the levels using the EMAs. All right, now this is a question also I get asked is, what do I use the EMAs for? Well, this is one of them, okay? Not only determining the trend and the direction, but also determining the levels. Okay, so when you see, like for example here, this is USD CAD, here's our peak, okay? This is a little bit of an ugly M, but here's our peak M in our first level drop here, okay? So this level 1 drop into this consolidation, you can see clearly that the 13 has crossed down below the 50 EMA, okay? That usually gives your level 1 signal, all right, that you're in level 1. Then we have our level 2 drop, okay, into this consolidation, and that's when you get your 50-200 cross, okay? And then your level 3 down here, okay? Now you can see that this has just come into the level 3, so you can see the EMAs aren't actually that fanned out yet. I said that in level 3 the EMAs will be fanned out. So in this example, this could possibly even drop down lower, because you can see this is kind of like a dribble choppy mess here. There's no real clear like W's or anything like that that'll give you any kind of sign of reversal. So you might actually see this drop a little bit more before making the W and then coming back up. And at that point, you're going to see that the EMAs are going to be more fanned out. Okay, so I'm going to show you an example of that on the next slide, where you can see the actual fanning out of the EMAs. All right, and this would be an extended level 3, which actually came and gave you a peak formation above the level 3. All right, and then you also have this extra 200-800 cross, and you even have to you even have a 50-800 cross here, and then the EMAs you can see fanned out. So here, let's take a look from the beginning. Right, we have our peak formation low. All right, then we have our level 1 rise. Okay, and you can see 1350 cross gives you a level 1 rise into our level 2 rise. Okay, here we have our 50-200 cross, tells you you're in level 2. And then here we have our level 3 rise, and then you have your 200-800 cross to denote your level 3 rise. And what this did actually is it came back up and gave you another level. Okay, so sometimes the market makers will do this. Okay, don't just expect it to always be a reversal at level 3, okay, because sometimes they can't extend it. And when they do extend it, they give you a peak formation like this, okay? The EMAs are going to be very fanned out. You'll see, like, there's a big gap in between all of these EMAs, okay? So when you see this kind of thing happening and you're way above, level 3, extended level 3 conditions, you're probably going to see a reversal happening very soon. So obviously the market makers didn't have enough contracts at this point to reverse it, so they had to take it up another level before they could bring it down. And coincidentally, from the peak formation down here to the top of this M structure here, this level 3, was 3 times ADR. Okay, so if you're using the ADR method and you're seeing that, oh well, it's 3 times ADR, it's probably going to reverse. Well, sometimes that doesn't hold either, right? Sometimes they will extend that because they have other plans, right? They have other goals that they needed to hit before they could bring that back down to here, this range, okay, this reversal. All right, so I want you guys to keep in mind that there are many different ways to identify the levels, okay? And I just showed you a whole bunch of different ways. So let's recap the ways, right? 2.5 to 5 days of rise or drop. So if you're just looking purely at the days of rise or drop, okay, you can look at it that way. You can look at the ADR levels, right? Figure out what the ADR of the pair is, and then measure out the drops or the rises by the ADR. Okay, sometimes they will kind of work out exactly to what the ADR is, and at 3 times ADR, you can expect some kind of reversal at that point. All right. Next would be Asian box stacking, which I showed you also. Okay, so you can look at the Asian session consolidation, the accumulation stages, and if you can stack them on top of each other over the course of the days, then you can probably figure out where you are in the levels as well. All right, and then lastly, we went over EMA crosses. Okay, so it's important to know all of these things, right? And it's important to know the levels. But I will tell you guys that it's not as important as recognizing the pattern, the timing, and the pushes, okay? I get people asking me all the time, like they're saying that they're struggling with the levels. They can't see it clearly. They want to learn how to identify the levels better. I mean, it's good that you want to learn that, and I do suggest that you do learn it, but it's not going to happen right away. It's going to take some time for you to get adjusted to recognizing that stuff on the charts, okay? And it will come to you eventually, but I don't want you guys to be focusing your efforts on trying to identify the levels or knowing the levels before you recognize the patterns, right? Or recognizing the behaviors that happens during London session open, or during the Asian session, or right after the Asian session, or New York session open, right? Market makers have certain behaviors at certain times, and they also have the pattern, right? That those are more important to get down and to learn than knowing where you are in terms of levels, okay? If you ask somebody who's a levels expert, okay, they might tell you something different than somebody else who's also a levels expert, okay? And you can see, based on the different ways that I showed you today on how you can identify the levels, there's lots of different ways to identify the levels, and they're not always congruent with each other, okay? So if you ask somebody, what level they're in, and you ask somebody else what level they're in, you might get two different, answers from two different people, okay? Because everyone sees the levels differently, and the levels are subjective that way. So don't put your focus too much on trying to learn the levels. Definitely look into putting more effort into learning the patterns, recognizing the cycles, and seeing the timing and the pushes and the behaviors at those times, okay? That's much more important than the levels. But hopefully this presentation today gave you a much better idea, a much clearer way for you guys to identify the levels, so that you can, it helps to know what level you're in, obviously, okay? And I'm not saying it's like completely, throw that out the window, but I'm just saying that there's other things that you should be more focused on first, mastering first before you master the levels, okay? So don't get hung up on the levels if you guys are struggling with learning the levels, all right? Okay, so that's going to do it for this video, guys. I wanted to do a little bit more information on some other stuff like resets and, possibly using, the charts, looking at resets and things like that. But I think I'll do that with another video, because it would just be too long and there's just too much information. I like to keep my videos short, because I want people to stay focused on the content that I talk about. I want to keep droning on, and then you guys get bored halfway through. Okay, so I'll save that for another video. I'll do a video just on resets, and then I'm also going to be doing some other videos on the TDI as well, because I know some people asked me to do some videos on the TDI and learning to trade with the TDI. The TDI is a very powerful indicator, and I'm more than happy to do a video on that to show you guys how to use that more effectively. Okay, so that's going to do it, guys. Thanks for watching. Please like, comment, subscribe for more videos. Please join our Telegram channel. Links are in the description box. And that's going to do it, guys. I'll see you guys on the next video.